What if I told you millions of Americans became wealthy without credit cards, without buying a pay later, without drowning in monthly bills? No swipe, no interest traps, no credit score deciding their future. Yet somehow, they built businesses, owned homes, passed wealth to their children, and slept peacefully at night. So here's the uncomfortable question. If credit cards didn't exist, how did people get rich? And more importantly, what did we lose when they arrived? This is Finance TED Official, a world without plastic money. Imagine America before the wallet was filled with plastic. No Visa, no MasterCard, no points, miles, or minimum payments. In the early and mid-1900s, and even earlier, most Americans lived in a cash-first world. If you wanted something, you had three options. Save for it, trade for it, build it yourself. That limitation shaped behavior, and that behavior built wealth. Ownership was the goal, not lifestyle. Here's the biggest difference people don't talk about. Back then, Americans didn't try to look rich. They tried to be secure. Homes were modest. Cars were practical. Clothes were repaired, not replaced. Why? Because money had weight. When you paid in cash, you felt it leave your hands. That pain created discipline, and discipline created margin. How ordinary workers built wealth. Most wealthy Americans before credit cards weren't geniuses. They were farmers, factory workers, shop owners. Tradesmen, their secret wasn't income, it was controlled. They controlled spending debt expectations. They lived below their means not because they had to, but because they chose to, and that choice compounded. Business was built on trust, not credit limits before revolving credit. Businesses grew slowly but solidly. A shopkeeper didn't expand because a bank offered leverage. They expanded because customers trusted them, profits accumulated, reputation grew, credit existed, but it was personal. A handshake, a ledger, a name you couldn't hide behind. Your reputation followed you everywhere. That accountability created honesty. Savings was power. Here's something shocking by today's standards. Americans used to save first. Savings accounts weren't optional, they were survival tools. People kept emergency cash, gold, or silver, land, or tools because they understood one truth. Wealth isn't what you earn, it's what you keep. Credit cards flipped that idea upside down. The moment everything changed in the mid-20th century, a brilliant idea spread. What if people could buy things they couldn't yet afford? At first, it seemed harmless, convenient, even empowering. But convenience has a hidden cost. Credit cards didn't just change payments, they changed psychology. Pain disappeared, delay vanished, discipline weakened, and spending exploded. When debt became normal, something subtle but dangerous happened. Debt stopped being an emergency tool and became a lifestyle. Monthly payments replaced full prices. People stopped asking, "Can I afford this?" and started asking, "What's the minimum?" Wealth quietly shifted, from households to institutions, not overnight but steadily. Why getting rich feels harder today, let's be honest. People today work hard, sometimes harder than ever. The system extracts quietly. Interest fees, penalties. Lifestyle inflation. Credit cards didn't make people irresponsible. They made irresponsibility easy. And ease is expensive. Skills credit cards erased. Before credit cards, people mastered budgeting, patience, repair negotiation. They waited, they planned, they said no. Those skills didn't disappear by accident. They disappeared because they were no longer required. The wealth habits that still work. Here's the powerful part. The old system isn't gone. The principles still work. People got rich before credit cards because they spent less than they earned. Owned instead of rented lifestyles, avoided long-term consumer debt, built skills and assets. Let time do the heavy lifting. None of that is outdated. History is quietly repeating. Notice something interesting? Minimalism is rising. Cash budgeting is returning. People are questioning debt again. Why? Because systems swing. When leverage goes too far, people rediscover simplicity, the same way they always have. This story isn't about the past. This story isn't saying credit cards are evil, it's saying unexamined habits are. Before credit cards, wealth required intention. Now it requires resistance. And resistance is harder, but more powerful. So here's the question no one asks anymore. If people got rich before credit cards existed, what would happen if you lived like they did Evan for 1 year? Comment below. Could you do it? Like if this changed how you think about money. Subscribe to Finance TED Official for stories they don't teach in school. Because sometimes, the future of wealth is hidden in the past.